Japan, the land of high speed trains, cutting edge robotics, and vending machines for literally everything. A technological powerhouse, right? But as much as Japan dazzles in hardware, there's one area where it's notably lacking, and that's software. From clunky corporate system to a surprisingly slow adoption of modern development practices, Japan's software industry lags behind many of its global peers. Why? Well, the reasons are rooted in culture, economics, and even geography. And perhaps surprisingly, some of Japan's greatest strengths are also its weaknesses in the software space. Let's start with a paradox. Japan is a hardware powerhouse. No one can argue with that. In the 80s and 90s, Sony, Panasonic, and Sharp dominated global markets. Japanese cars from Toyota and Honda still setting global benchmarks. Even today, Japan excels in robotics with companies like Fanuc and SoftBank Robotics leading the chart. But software, not so much. For example, when was the last time you heard about a globally dominant Japanese software company? Line? Rakuten? These are exceptions rather than the rule. The thing is, software isn't just about making apps. It's about building ecosystems and enabling innovation. Google's Android powers billions of devices. Microsoft Azure fuels global businesses. Even China's Alibaba and Tencent are reshaping industry with AI and cloud services. In Japan, it's still struggling to keep pace. Let's talk about corporate software. In Japan, many businesses still rely on bespoke, outdated systems, custom built decades ago. These systems are often so deeply ingrained that ripping them out feel like performing open heart surgery on a company. Take Japan's banking system for example. Many banks still rely on COBOL, a programming language from the 1960s. Migrating to modern system will cost billions and take years, so companies just don't. The result? Inertia. Workers start using clunky interfaces and entire industries move at a snail's pace when it comes to innovation. But the issue goes deeper. These legacy systems don't just affect internal processes, they ripple across the entire economy. For example, businesses relying on outdated software struggle to integrate with modern technologies like cloud computing, AI, or automation. This creates a domino effect where innovation is stifled at every level. Want to introduce a mobile app or automated customer support? Too bad, the backend can't handle it. Want to move your company's operation to cloud for better scalability? Good luck with that. The legacy system is so customized that migrating it would require rewriting thousands of lines of ancient code. Even something as simple as online payments become a headache. Many companies are still tied to old-fashioned payment gateways that don't integrate with mobile wallets or international payment system. In every case, the reliance on outdated systems prevent businesses from keeping up with consumer expectations and technological advances, leaving them at a competitive disadvantage in the global market. Now let's dive into culture. Japan's business culture is built on hierarchy, seniority, and perfectionism. While these values can be strengths in hardware manufacturing, they don't mesh well with the fast-paced, iterative nature of software development. For instance, software thrives on agile methodologies where teams make decisions collaboratively and pivot quickly. But in Japan, major decisions often come from senior management far removed from the developer themselves. This creates a bottleneck that slows down progress. Then there's perfectionism. In manufacturing, striving for perfection ensures reliable products. But in software, it's a recipe for disaster. Software development is messy. You release a minimum viable product, fix bugs, and improve over time. But in Japan, releasing something unfinished is seen as unprofessional, so projects get delayed or worse, abandoned. Another challenge is the education system in Japan. Japan's university excel in engineering, but software engineering is often treated as an afterthought. While countries like India and US pump up thousands of skilled developers every year, Japan's focus remains on hardware and electronics. And then there's a language barrier. English is the lingua franca of programming. Documentation, forums, and global collaboration all happen in English. But Japan's education system does not prioritize English fluency, leaving many developers isolated from the global tech community. And here's another complicating factor as well. Japan's aging workforce. Japan has one of the oldest average working age in the world. In fact, over 28% of the population is age 65 or older, and this trend is reflected in the workforce. This has real implication for software development. Older employees, while highly skilled in their fields, are often less familiar with modern software tools and methodologies. Many were trained decades ago where hardware engineering was king and programming wasn't nearly as common as it is today. Retraining this workforce is a monumental challenge, especially in industry where traditional values like loyalty and seniority dominate. This generational divide also impacts young workers. While the next generation of developer is eager to adopt modern frameworks and global best practices, they're often held back by entrenched corporate structures and outdated mentorship models. It's not uncommon for younger developers to leave for more flexible, forward-thinking companies abroad. Startups could be a solution, right? After all, startups thrive on disruption and innovation. But Japan's startup ecosystem is frankly underwhelming. Venture capital is hard to come by and failure is heavily stigmatized. In Silicon Valley, failing a startup is practically a badge of honor. In Japan, however, it's a career-ending move. And let's not forget the risk-averse culture in Japanese. Japanese investors prefer safe, stable bets. That's why you see more funding for hardware startups where results are tangible than for risky software ventures. What about the government? Surely it's stepping in to help. Well, yes and no. Japan's government has launched initiatives to digitize industry and promote innovation. For example, the Society 5.0 initiative aims to integrate physical and digital technologies. But here's the catch. Regulations. Japan tech industry is heavily regulated and making it difficult for new players to enter the market. For instance, strict data protection laws and bureaucratic red tape make cloud adoption slower compared to countries like the US. And regulation don't just affect startups, they also slow down large corporations, which dominates Japan's economy. Established companies often benefit from government support, but they also face bureaucratic inertia, making it difficult to pivot quickly or experiment with risky new ideas. For example, the financial tech sector in Japan has grown more slowly than in other countries because regulation favor traditional banks over agile fintech startups. Services like cashless payments and peer-to-peer lending, which are booming in China and the US, struggles to gain traction in Japan. Another factor, Japan's immigration policy. The country has a well-documented talent shortage, particularly in tech, but restrictive immigration rules make it difficult to bring in skilled workers from abroad. Countries like Canada and Germany actively court international developers with streamlined visa process, while Japan's policies remain cumbersome and uninviting. Without fresh talent, Japan risks falling further behind the global race for innovation. So, can Japan catch up in software? Well, there's hope. While the challenges are significant, younger generations are embracing global trends like remote work, open source development, and agile methodologies. Companies like Mercari and Smart News are proving that Japanese startups can compete and succeed on the global stage. But for real change, Japan needs to address its systemic issues. Here's what needs to happen. Firstly, Japan needs to reform its education system. Japan must prioritize software engineering education, focusing on hands-on coding skills to prepare students for a globalized tech landscape. University could collaborate with global tech leaders to modernize their curriculum and offer internships at cutting-edge companies. Secondly, they could create a more startup-friendly environment. The government and private sector must work together to foster a culture that supports risk-taking. This means better funding for startups and tax incentives and shift away from stigmatizing failure. A thriving startup ecosystem can act as a breeding ground for innovation and help break the reliance on legacy corporations. Thirdly, Japan could embrace modern development practices. Companies need to overhaul their outdated workflows and adopt agile, Scrum, and DevOps methodologies, as these practices encourage collaboration, iterative improvement, and faster delivery, which are all essential qualities for competing in today's software industry. Now here's where things gets interesting. Despite Japan's struggles in software, it's a global leader in the gaming industry. Companies like Nintendo, Sony, and Square Enix have produced some of the most successful and innovative games in history. Gaming is one of the few software-driven sectors where Japan excels. Why the exception? That's for another day. But even here, challenges are emerging as gaming becomes increasingly reliant on cloud-based platforms, AI, and live services. Japan's relative lack of expertise in cloud computing and AI-driven software poses a risk. Staying ahead in gaming will require bridging the broader software gap. The road ahead won't be easy, but it's not impossible. Japan has reinvented itself before, from its post-war recovery to its rise as a global economic superpower. The same spirit of resilience and reinvention can transform its software industry too.